Good day, everyone. Well, we're seeing outrageous, raging inflation. CPI is, as we know, one of the most distorted figures that are reported by governments. We know that in the US, its latest reading was 8.3%, but Americans are experiencing inflation at much higher rates than the already steep 8-something%. And we all know like things like fuel oil up almost 70%, gasoline's up 25%. I mean, things are coming off their peak, but at their worst levels, things are not at 8%, that's for sure. Even eggs are up at 40%. And airline fares up about 33%. So the median CPI, interestingly, if you look at the that graph there, recorded 9.2% annual rate in August. That was the single highest monthly print in their data set, which started back in 1983. And interestingly, the second highest print was just last June. So the Fed can return to 2% inflation if it crashes all markets by creating the mother of all recessions by continuing to hike rates. This could create a worse financial crisis than we saw in 2008. Big banks would have to be allowed to fail, which could include customers losing out on their deposits. Interest rate hikes take time to impact inflation. The Fed is always behind the curve. The CME Fed futures now show 2 75 basis point hikes, then a 50 rate hike in December, and that would bring the target FFR to 425 to 450. While higher rates curtail demand, the real issue is the supply side of the equation, to which the Fed is ill-equipped to combat. Supply chain shocks due to COVID have largely contributed to inflation, as have uneconomic global warming policies. We have to remember everything is downstream from culture. Governments know this, so they use the mainstream media as a weapon to create FUD, which in turn pushes politicians who want to be reelected to do what the misinformed, misguided, brainwashed public wants. The degree of disinformation on global warming, COVID, and nutrition, let alone drugs and sex, is staggering. So how did we get to where key important economic indicators are grossly misleading? And also to where central banks control fiat and to where nation states control and collapse our freedom of movement and freedom of value transfer. The formula has been practiced by every dictator and corrupt government over the millennia. Focus on obvious issues that are emotional triggers, such as terrorism, child trafficking, nuclear energy, kidnapping, or money laundering. Anchor the law to the protection of innocent victims, even though the percentage of actual victims is at least an order of magnitude below the common threats that always get underreported. Then, because the lawmakers now have a public on their side, they can easily enact laws that further remove our personal and economic rights. Common threats that are not mainstream media fodder are vast and numerous, and these are always underreported. And these threats include record levels of teenage depression and suicide from overparenting, domestic violence, kids getting sick on new viruses from degraded mask-induced immune systems, and kids malsocialized from nearly 2 years of lockdowns, among numerous other issues that are plaguing us. In the world of trading, as one of many examples, some of us may remember when eighths were traded, and then eighths went to teenies, and then teenies were decimalized. And this created more slippage for retail investors due to fewer market makers. In the world of economics, the printing of money debases fiat while assets rise in value. So the rich get richer and the poor get poorer. Needless to say, there is a pandemic of disinformation on all the hot topics: drugs, sex, politics, COVID, voting, investing, taxes, religion, education. And if you go against the cultural narrative, you may be labeled a conspiracy theorist. On the Me Too movement, you can't apply modern standards to yesterday's actions. Standards change, cultures change. Of course, this does not excuse any form of abuse, but many innocents have been thrown under the bus. We should therefore have a hashtag sex to and hashtag drugs to and hashtag justice system survivor for the millions of victims imprisoned or ruined for what really amount to victimless crimes. You can't apply modern standards cross-culturally. What's legal in one culture is a crime in another, such as the use of marijuana in California compared to try using it in Hong Kong and China. Jackie Chan, the famous martial artist actor, his family has been disgraced because his son was smoking weed just recreationally with a couple friends on a Friday night. Likewise, what is sexually celebrated or embraced in one culture may be demonized in another. And don't forget that witches were once burned at the stake. Many careers were ruined during Senator Joseph McCarthy's Red Scare in the 1950s and 60s. Millions were, and in some countries continue, to get sent to prison for smoking weed. And countless were and are sent to prison for victimless sex crimes. We should thank the whistleblowers dating all the way back to Galileo and Copernicus, up to contemporary times such as Snowden, Assange, Swartz, and Guccione, who incidentally asked the courts, why do kids' cartoons depict violence, such as the Roadrunner show, yet sex, which is the act from which we are made, is demonized? Indeed, contradictions run rampant. The legendary musician Frank Zappa said that there is more stupidity around than hydrogen, and it has a longer shelf life. I would add that hypocrisy often follows. Freedom is the use case of crypto that solves censorship and control via decentralization. Crypto breaks apart big pharma, big oil, big business, big philanthropy, and big fill in the blank. So as far as the inflation issue, which of course is spawned by a number of these other issues, we're looking at an FFR of 425 to 450. Which I would say means $10,000 a Bitcoin and market averages plunging at least 50%. I think that stocks and crypto may find major lows once the Fed halts their rate hikes, but that's far from guaranteed. A halt to hikes probably comes by the end of the year once the FFR hits 400 basis points or more. High inflation will be far from resolved and far from the Fed's target 2%. But near record levels of debt, personal insolvencies, crashing earnings, soaring unemployment, and broken supply chains will create the mother of all recessions unless the Fed finds a reason to halt rate hikes. The targeted 2%, forget about it. I think we're going to look at 4.5% to 5%, that being the new norm that the Fed's going to set. Ray Dalio of Bridgewater had an informative view on this target range in a recent piece he wrote. So even once they start to print money again, that's still no guarantee that stock or crypto markets will find major lows. We had a number of bear markets where the discount rate was quickly reduced, but major averages continued to plumb new lows. And there's a slide that shows basically a brief on some of these bear markets. I think Gil has it. It's that one. So you can see from October 29 to January 32, the Dow lost 90% of its value. The discount rate started to get reduced a month after the crash, all the way to August 1931. But basically, we had 32 months of rate. That's 32 months of rate reductions before the S&P or the Dow found their major lows. And you can see this has happened also in the early 80s. In the early 2000s, and here we sit today, where the Fed continues to hike rates, even though that the signs of a recession are clear, but of course they're using the safe metrics of low unemployment to justify, soaring earnings keep going. I guess earnings are to them healthy. So all these indicators, which are lagging indicators, to them mean that we're not in recession yet. So the fact that today they're going to hike by at least 75 basis points, this is just, I think, unprecedented, where you get just such bad indications of where the economy is headed, and the Fed still has no choice but to hike because interest rates are still near the floor. So this should be interesting what happens next in terms of the health of the markets. I think that if they print massive sums, like they did post-2008 after the great financial collapse, or after March 2020 due to COVID, then yeah, I mean, if they want to go ahead and shovel $6 trillion into the system, then I would be a big raging bull for sure. But I think that doing that again seems so much less likely today because we've got the twin flame configurations of high inflation and near record debt. Interest rates are also still well below historical norms. So in other words, the Fed doesn't have inflation, debt, nor interest rates on its side to launch QE5. And such would likely end up pushing rates negative anyway, since interest rates are still relatively close to 0%. So they probably will take a slower approach to at least prevent markets from rupturing further once they get down to those critical levels of probably being off 50%. Gil, how are you seeing everything?
I would not assume the market's going to do anything one way or the other after the Fed meeting or the Fed announcement. I think everything is pretty much known and maybe baked into the cake because if you think about it, the current market environment is bizarre from our perspective, and I don't think it's ever happened before in history where the Fed is raising rates into a bear market and during a bear market. Whereas in the past, you look at 2000, 2008, and the Fed has been lowering rates, and yet they could stop the market decline. Here you have a market decline of what are we down? 20 something, 27, 28% on the S&P.
I would think is 25%. I just did the calculation. So S&P is down just about 25% peak to trough, and NASDAQ is down 34.8% peak to trough.
Yeah, so I think with the interest rates going up from 0 to what are we at, 3.5 now? I guess it's what we're going to be at after today. You would be down over 50%, and so the market remains somewhat buoyant, relatively speaking. And you do have some areas of leadership that have been holding up. So I don't think you can really assume anything. No matter how many monologues you want to write, I don't think that you can assume that, the Fed's going to raise 75 bips a day and the market's going to tank. You could easily just shoot higher because the market may say, okay.
That's a very good point. I mean, I never said that the market's going to tank after the Fed hikes.
No, I'm not saying today. You said that. I'm saying that's the consensus.
I got you. That is the consensus. But I think that's wrong because if everyone looks back at every time Powell makes a testimony after the 2-day Fed meeting, I think in every single case this year, the markets have rallied close near the highs and they continued to bounce, except once, and that was in May. But I think that Powell is just very good at jawboning and making markets feel this comfort, which is false comfort, of course, because I mean, going out to say, the end of the year, I think the odds are very high that markets are going to retest lows just because the macros are so screwed up. I think the most screwed up I've ever seen them, actually, in if you go back, 50 to 100 years.
Yeah, I mean, that seems like the logical conclusion that things are so screwed up that we should go lower, and probably we will eventually, but that doesn't mean we couldn't have a big sharp rally here after this meeting. Similar to what we had right smack in the middle of September 2008. Let's see if I can pull something up here. Let's look at I'll look at a weekly chart. Well, actually, that's not going to show it. Let's see. The best way to do this is to come in here with the.
I also wanted to point out that because people are so bearish right now, it's, I think, a replay of what we saw in July when markets rallied in the face of really horrible news because there were so many shorts piled in. There was a short squeeze.
Yeah, everybody's short right now. Yeah.
Yeah, I wouldn't be surprised to see a major short squeeze where we propel higher for the next several days.
Okay, here's I'm pulling up the NASDAQ here. This is this crazy rally that we saw right in the middle of September 2008. Huge volume. I mean, I'm sure over at IBD they're calling a follow-through day because it's overwhelming power. Because O'Neill writes in his book How to Make Money in Stocks, a work that I consider very dated at this point. He would say, if it's overwhelmingly powerful, then that it's a new market rally. And there was some talk of that at the time, but it was a 2-day wonder rally, and then that was it. Kaboom, the gooey kablooey return. And I'm wondering if we get something like that. So yeah, I don't see any reason to be trying to short the market here. One thing I might keep an eye on is the precious metals space. mainly because you have some dynamics here. Let's say if the market assumes you got 75 bips, then we're going to drop to 50 and then 25, and they're going to limp into 2023 with a few more little interest rate increases, or so they say. What I find interesting is the Fed hasn't been able to predict anything, least of all inflation. And now here they are telling us exactly how high they're going to raise rates. They may find that they got to turn the other way a lot sooner than later. And then with the national debt at 31 trillion, how exactly do they raise rates with the 10-year yield now over 3.55 at an 11-year high? So there are all these weird cross currents, and I think it creates the potential for unexpected and unintended consequences. And so I think you really have to be alert to a lot of different possibilities. But I do think that I would watch what's going on with the silver market right now, because there is a shortage of silver. Okay, that's a fact, and it is used. Over half of it now is used for industrial purposes, but there is a wild shortage, and you've got these banks like Bank of America short 850 million ounces of the stuff. That's about a year's production. You know, Goldman, JP Morgan, all the same, Citigroup. And so you have that aspect, and then you have some of the bigwigs at JP Morgan getting indicted for price manipulation in the silver markets. But I mean, silver is a real thing, and it's a real commodity. So we've seen things like aluminum and copper and lithium now has been running like mad, and other commodities like this, metals in particular, which are in short supply, rallying. I wonder if something like that couldn't hit silver. And so I look around for rumblings of that. So when I look at some of these, this is not silver. I'll look at my miners here. This will include silver. But you look at things that are up today on volume. The PSLV has been hanging along the 50-day line. We've been talking about this. You had a pocket pivot there. I think it missed by 1 day, but you had a pocket pivot in the SLV, so that's good enough for me. And then from there, we pushed to the highs of this little range here. So I would watch this because this could turn out of here very quickly, especially if the market rallies after the Fed is done today and they begin to perceive that you're over the hump. Okay, so it's all going to be perception, and it's all going to be about money flows, because right now the whole world is leaning towards the short side. So if all those puts that are out there suddenly have to flip the other way, then you've got a rally on your hands. So things that I'm watching as possible areas to play would be here. We'll see if gold, I don't think gold has the same driver in terms of the industrial shortage of silver, because, it's gold and it's mostly used in jewelry. Although Apple does buy 3 tons a year to use in their iPhone. So it has some uses. And if space expands, the whole thing in space expands, and it has a lot of uses there as well. But silver really has more uses. So I would say that would be the commodity to keep an eye on here. And you are putting in some lows. You have an undercut and rally on the PSLV through this low way back here, and you've rallied up and you're holding tight. So some of the best miners to look at, I think, are, well, let's go through the list here. Most of these are the ETFs. Cisco Gold Royalties, I would go with First Majestic. I think it's one of the higher quality names here, but we'll see how that plays out. It's kind of, everything is kind of hanging along its lows. Mag Silver is a very strong cash flow story. They have one mine in Juan Scipio in Mexico that is going to be producing quite a bit of silver and will become a cash cow. So, but you're going to need the catalyst, and I'm interested to see what these do after today. So the other thing is just to be long the PSLV, which has already flashed long entry signals, and we've already talked about that. So you can use that or the SLV if you want. I prefer the PSLV, but you can see the undercut and rally is much more marked in the SLV, and now you get the gap up here. You have to be careful with viable gap ups in commodity ETFs, because you have to remember that overnight this is a continuous move. So it really wasn't a gap up, and all you did was come in to fill the gap, and now you're hanging out, and you did post a pocket pivot on Friday. So now you're just hanging out in here. We'll see how this plays out. But my preferred vehicle is the PSLV. I think also OUNZ is another one of these. It's a gold, physical gold long PHYS, and you can see that these are lagging. Whereas the PSLV is turning, and I think a lot of that has to do with the fact that there are severe shortages of silver. The price has been suppressed for a long time. And you can go on to the various bullion dealer websites, and you cannot find coins for less than $30. Silver coins. You can find rounds for closer to $3 or $4 over spot, but I don't like to buy rounds. I prefer to buy sovereign coins, primarily silver eagles, or some of the Canadian maple leafs, or the British. I forget what they're called. They got some name. Anyways, so that's one theme I'm looking at. Other things to look at here would be a tech rally, based on the fact that you're pretty well oversold. So if we look at, say, let me go to semiconductors here, and I'll just go to the big stock names. They're actually all up today. And you look at some of these turning off of lows, and I'm looking around for undercut and rally type moves. So you actually have one here at this low right here. So that occurred about a month ago, and you retested it. Your volume dried up sharply yesterday, and now you're trying to turn. That's in Marvell Technology. Skyworks just trundling along the lows. Nothing really concrete there, but here you have an undercut and rally in Qualcomm. Microchip, nothing really happening here other than the fact that you're rallying up off of lows. NXP is in a little undercut and rally position, so is NVIDIA. Micron is pulling an undercut and rally through this low over here, so that would be from July 1st. And you got some pretty big volume based on the levels already today, but we're only about about 2 hours into the day. And so this could drop down, but right now you're working on an undercut and rally move off the lows. And this would be one area to look at for just a possible sharp reaction rally. So instead of playing all these various semiconductors, you're trying to pick one. You may just want to do something, which would be my preferred strategy, is just to go along the SOXL, because you're down in undercut and rally land. It's hanging out. It's already up 58 cents today, so it's doing reasonably well. So there isn't a lot of timidity out here around here in the at least in the semiconductors today. They're coming after them, but of course they're really oversold. But these are areas I would be looking at, and I would be looking for undercut and rally moves. You can see Lumentum Holdings has an undercut and rally. Well, it's trying to pull one off here at this low, which is at 73.97, and you're just underneath it right now at 73.73. So it could turn, but these are the things to keep an eye on, and this is what I would be watching for, is technology to turn. And probably the better quality names. If we look over at the big stock NASDAQ names, most of which I believe on this list that I have here are tech names. You can see here's NVIDIA again. It's a big stock NASDAQ 100 name. Qualcomm as well. Going the wrong way. Intel, trying to turn off the lows. It's pretty well oversold. Look at those big fat bingo oversold bars. Microsoft way down here in undercut and rally land. You see that? It pulled that yesterday. So I thought that was constructive, especially with you have 3 bingo bars here. So you're in an oversold position. Okay, so the fact that you're coming into the Fed meeting today, and the market might perceive that you're over the hump, so to speak, you could see these rally by virtue of the fact that they are oversold, and the market's perception that the Fed is now over the hump. So we'll see what happens. Kramer says NVIDIA is Kramer's a moron. I'm amazed that guy. I got to hand it to him. He makes $5 million a year. CNBC pays him that. Basically, just spew bullshit all the time, and everything he says is wrong. He called a market bottom in March. He called a market bottom in June, and he's been wrong all the way around. So you don't want to pay attention to him. But the fact that he's telling everyone that NVIDIA is a short now, when this guy was telling everyone that you got to buy this, it's a quality name all the way down, and you're down into this region. If you look at this, weekly chart's also useful because you can see you're down into major support on the weekly chart. So you could get a turn here. Again, I like playing the SOXL. Okay, you can try to go for a big stock name like NVIDIA if you want. I don't know if you get more leverage. I think you get about the same with the SOXL, but what I like about the SOXL is it kind of evens out any individual stock risk. So that's something to think about. Meta so I'm just going to go through these. This is a dog. This is a piece of garbage. Meta Platforms. I mean, they try to disguise themselves as a metaverse company. So, but I don't think Mark Zuckerberg. Look, Mark Zuckerberg, probably a smart guy. I don't know if he's that smart. When I listen to him speak, he doesn't strike me as being that smart. Certainly not like Steve Jobs or Elon Musk. And I think the guy just got lucky with creating a social networking page. It's pretty simple on its face, but yet now he's suddenly become an expert who's going to guide this company, Meta platforms, through the new developments in the metaverse. I ain't buying it. Neither is the market. So, this thing is to me a dog, and I don't really want to play here. You can see booking. A lot of the travel names are getting whacked today. I'll get to that in a second. But you see Apple has been rallying. It rallied yesterday, even though the market was down pretty good, which I thought was very interesting. Which it tells me that maybe tech is more buoyant than people really realize right now because it's so oversold. And so I would just be alert to this, and you can take a shot, wait till the Fed comes out and then boom, hit the button on some SOXL or whatever, or TQQQ. I actually traded that this morning and made a few dimes, but nothing really going on there. I still, if I'm going to play a thematic sort of thing, I like the silver and the miners. I don't know about gold, but I think gold, if the market perceives that the Fed is over the hump, then I think you'll see gold rallying. It's also Russia is talking about setting up a new gold standard, and ultimately, I don't think countries are going to trade in crypto. I think they're going to come up with something else to replace the dollar, which would be some sort of hybrid currency based on some basket of commodities, or based on maybe rubles and yuan and rupees and stuff like that. So I would not assume that currencies are going to come out of vogue. I think the dollar may come out of vogue, and that's going to be the big problem for the dollar in any case. And if the dollar collapses, then precious metals go up. Maybe Bitcoin rallies too. Tesla hanging up here along the highs of the base. So this could push higher, even though it looks kind of doggy. And of course, you can make a lot of arguments against Tesla, but I don't think it's about necessarily fundamentals. I think it's just about money flows. Amazon, you can see, is down here getting into undercut and rally land. And also, you've come down for a while. And if you look at the pattern on a longer term basis, it's been beaten up for a while. So you're coming down all the way down into this area of congestion. So you could bounce here. So my main point here is that a lot of stocks are in positions where they could bounce. If it's the end of the world and everybody perceives the Fed today as signaling the end of the world, then maybe everything blows up. Cloud names, always interesting. Most of these have been beaten up as well, and you can look at weekly charts here, or even I can zoom out on the daily chart and you see just how ugly some of this has become. But they topped well before the market in September, October, and November of last year. And they've been trying to rally a little more with a little more spunk lately. And, you can see the turns here. I don't know if this group is really where I want to be, but I tend to like some of the better names, I think, in the space would be Bill.com is in an undercut and rally position. It's trying to pull off a little undercut and rally through this low. Can you see that? So it'd be these two lows in here, and there you are today. I think also CrowdStrike may be one to watch here along the lows. I like Coupa Software. This one is interesting as it pulls. You got to blow this one up, but you can see it's pulling right into the 50-day line after a bottom fishing viable gap and then turning up off the lows. And so we're up, what are we trading at? 66.57. The low is 65.09, so it's turning off the lows. And this is an interesting name to me as well. Some of the others in the space, I don't know, but I guess I'm biased about DocuSign because the CEO of the company rented a house of some friends of mine, and I just heard some really nasty stories. So I guess I'm not going to go into any details, but apparently it was not a pleasant renting experience for my friends, and so I just kind of biased against it. Maybe it's nothing, I don't know, but in any case, but it looks like it could potentially try and turn here, but I like Coupa better. Cloudflare is another one trying to turn off the lows. You can see you get this little kind of undercut and rally action here, turning back up the other way. And then, of course, there's the bigger names that are beaten up. You look at ServiceNow down along the lows. You look at Workday. So I bet you most of you didn't expect to hear about long ideas, huh? I don't know. I peruse I can watch several channels at once on my hot new TV, and I put on the financial cable TV channels, and you can hear them all say the same things at the same time, which is very interesting. And so I kind of use it as a sentiment indicator. And right now, everybody seems to be bearish. Now, maybe they're right, but I don't know. All I know is, I got bearish back in November, and I can remember going on benzinga.com and these idiots asking me about, oh, but isn't the Fed going to engineer a soft landing and all this other stuff? And when everybody in the media knows something, usually you got to be cautious and a bit wary. So, anyways. And so the guys at benzinga.com, there's a couple of goofy guys there who I don't think really know very much because they haven't been around very long, but there are some really good traders there as well. Like I know Dennis is a pretty good trader. Atlassian, not necessarily, but some of these others, Splunk, not really looking very good, but that's kind of what I'm looking at right now. So we'll see how this plays out. Appian is another interesting one. Hanging down here. But again, these things are so beaten down and they really haven't wanted to go lower. So they're either in bear flags or they're ready to turn. And we'll see what happens. So again, I'll repeat it. I think you want to be even-handed heading into the Fed announcement here. Now, some of these metals, look at Alcoa. I think Ford, as I was tweeting yesterday, really threw a stink bomb into the market yesterday, and that triggered that sell-off because they came out and said that they're going to realize $1 billion more in cost because of inflation. I also think the automakers are going to get pretty well screwed as auto sales plummet, but we'll see how that goes. I keep getting calls from dealers wanting me to trade in my car for a new deal. Yeah, for a car they want to sell me at $15,000 over MSRP. No, thank you. Albemarle, lithiums have been holding up, okay? And as much as we would like to short this one, and it does become shortable at times, it doesn't want to bust the 20-day line. So maybe it settles down and, you get an inverse head and shoulders near the highs. That's a new one for you, right? And maybe these move higher. Camco, I still think uranium is going to be a major thematic area, but it's selling off because you had a big move and some of the news is dissipating. And I think there was some news that somebody had to cut back their nuclear power plants, but I would watch here as it pulls in. You're running below average volume, so in here you're right on top of this structure. And I would watch for a shakeout that either occurs down to the 50-day line, and that might be viable support, or a shakeout at the 20-day line where it rallies back above. Century Aluminum is just a dog. I think aluminum's kind of done for now. Cleveland Cliffs is way down here in undercut and rally land. It may actually have pulled one. So the low here is 1431. This morning we hit a low at 1447. Yesterday we hit a low at 1441, so close, but no cigar, as they say. And metals, but I would be watching metals simply on the basis of a commodity inflation play. Hudbay Minerals, I like the way this is hanging in along the 50-day line. Too bad it's a cheap stock. Lithium Americas looks okay to me. It holds support along the 200-day line, so that seems to have been a place to buy it. Livent holding up near the highs. Now, you'd like to look at these as potential double tops, and in fact, you can scalp. Here you get a double top breakdown, and it comes down at the 20-day line, so it's good for a scalp. But I think for the most part, my experience on the short side lately is that most stocks that I short, assuming I make money on the trade and don't get stopped out, they're good for some quick scalps, and that's it. Rare earth metals, MP Materials, really the only major producer of rare earth metals in the U.S. So you got a little undercut and rally here 3 days ago. You can see that right here. So that's interesting. The steels are getting clobbered because of perception of a slowing economy. Reliance still trying to bounce. Sigma Lithium, I think, is one of the best lithium names to play, but it's kind of thin. Trades 559,000 shares a day. It has the best pattern. In other words, a consistent uptrend rather than this choppy stuff you see in Albemarle and Lithium Americas and Livent. But I think the group will move together, assuming they do go higher. Copper also seems to have lost its luster, but there's a few areas I'm looking at. I think the rare earth metals, I think the lithiums, the silvers, stuff like that, I think are worth looking at, and just have some names in your back pocket. And among the tech as well, the SOX L and all the semiconductors that make it up or make up that ETF, or components of the ETF rather, I should say, and work it from there. We'll see what happens. But I think, don't assume that we're going to blow up just because the rest of the world does. A lot of times, as I showed you in that chart of that NASDAQ chart from September 2008, they can fool you for a couple of days, and the whiplash can be brutal. And if you can be long that whiplash, so much the better, right? So we'll see how this all plays out. Anyways, any questions before I wrap it up? Got anything else?
There was an FAQ. They asked, interested to know your thoughts on the put-call ratio on the SPX. The huge spike means massive downside anticipation is present in the markets, but as I understand it, that's not the environment for a stock market crash, as you are expecting. And my response is that, yeah, the crowd is usually wrong at extremes. When the ratio spikes, many are bearish, and that sets up a potential short squeeze or buying pressure once those bearish bets are exhausted and unwound. And then just keep in mind that oversold can become even more oversold. So a spike in rare cases can continue even higher, which is more likely to occur during actual market crashes. But I'm not anticipating a market crash, not at this juncture. The Fed's not stupid. I'm sure they're going to soft pedal everything like they've done. And every time this year they've met, and the markets have rallied, and they tend to bounce for a few days after Fed meetings, except for May. May was the only time where markets kept going lower. So.
Yeah, you can see there is a spike here. It actually shows up as a higher spike here on the bar chart, up to close to 140, and that occurred last Friday, which I thought was interesting. And then if we look at the other one, the put call, the equity, you can see that was a huge spike there, and now you're back down here. So you had the spike last Friday, and that's another reason why I'm thinking everybody's too bearish here. You can also see, if we look at the NAIM, the National Association of Active Investment Managers, everybody's now back on the bearish side of the boat, and so that could set up a potential rally. But I think it's going to be very interesting once the Fed comes out, and we'll just see how that plays out. But I've given you some ideas to think about. I don't really see the short side as being as ripe as I would want it to be. In my view, you've got to be anticipating the short side when everybody's bullish. You can go on Twitter, and IBD is telling you you're in a confirmed uptrend, and all the IB dweebs are twittering away about how great everything is, and this leader and that leader, and then kaboom. And that's when you want to be thinking about the short side. Now, with everybody getting bearish, you've got, you're coming into this little area of congestion on the SPY. Maybe it's an area where you see some support. Same thing with the NASDAQ pulling into this area of congestion, similar to the S&P, and you're just hanging down here. So, I mean, it could go either way, but I'm ready to play it whichever way I have to, or whichever way plays out. And if necessary, I'll abandon stocks and maybe go for something like the UVXY if, in fact, I see a setup there. So anyways, that's it for now. As always, thanks for showing up, and get excited. It should be very interesting action after the Fed policy announcement today.